Good morning, everyone. This is Marshall Giller bringing you the morning comment for February 25th. Well, Fed Chair Yellen came out with a pretty well-balanced statement yesterday, which the market took as slightly dovish. The key points were that she said they would drop the patient phrase before raising rates and would wait a couple of meetings at least after dropping the term before they raise rates. Concretely, this means at the earliest they could drop the phrase at the March meeting and start raising rates in June. At the same time, she emphasized that dropping the patient phrase does not mean that they'll necessarily start raising rates, quote, in a couple of meetings, unquote, but rather just that a rate hike, quote, could be warranted at any meeting, unquote. In other words, after they drop the patient phrase, then they'll be watching the data and decide meeting by meeting. This important sentence was seen as diluting the forward guidance somewhat and caused a big change in view on interest rates. Moreover, Yellen also emphasized the continued low level of inflation, thus the dovish interpretation. At the end of the day, though, the bond market seemed more interested in the testimony than the FX market. Nonetheless, I think the testimony could dampen demand for the dollar somewhat. A lot now depends on inflation, and the global trend is for inflation to remain soft. So, while I think the dollar is still on an uptrend, it may not rise quite as quickly as I had expected unless U.S. wages start to rise significantly. In that respect, the recent move by Walmart to raise wages could be even more important than Yellen's testimony. Bank of Canada Governor Polo said the Bank of Canada's surprise cut in rates last month has bought the central bank some time to see how the economy develops. This caused investors to back off from their assumption that the Bank of Canada might cut rates again at the March 4th meeting, and the Canadian dollar strengthened as a result. But in any event, another cut is still in the cards, and so I expect the Canadian dollar to remain under pressure, especially as oil prices remain under pressure too. China's preliminary HSBC market PMI for February bounced back to 50.1, just above the boom or bust line of 50. This caused a jump in the Australian dollar and the Kiwi when it came out. However, with domestic activity sluggish in China and external demand uncertain, I question how far the measure can rebound and therefore how much support the commodity currencies are likely to get from this source. Today's highlights. During the European Day, we get French consumer confidence for February. In Sweden, the Riksbank publishes the minutes from its February policy meeting where it decided to cut the repo rate and introduce a mini QE to make monetary policy more expansionary. Given the fact that the bank can unexpectedly introduce further easing measures at any time, I think the Swedish krona is likely to remain under selling pressure. In the U.S., Yellen testifies again, this time to the House of Representatives. It'll be the same speech as on Tuesday, so the focus will be on the questions. As for the indicators in the U.S., new home sales for January coming out. In New Zealand, the trade deficit is expected to remain more or less at the same levels. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.